think the setup, Kelly, going into the fourth quarter is very good. There's this recency bias. Everyone remembers the last fourth quarter, which was terrible.
Right.
But fourth quarters are generally good. So we've had nothing but good news this week between the Fed going to steepening the curve and really QE light, effectively. ECB minutes looking very, very dovish. You had the fastenable numbers on the industrial side. We've been saying we think the manufacturing cycle is bottoming here.
Wow.
You know, the ISM index started turning down 11 months ago.
Mm-hmm.
Manufacturing cycles have a way of working themselves out automatically as inventories readjust. And Germany's going to be lapping its negative numbers next month. So, you know, that's working. The trade news just get less worse. That seems where we are right now. That's all we need. So
less worse.
The setup looks very good, and I love the sentiment being negative. I think that's
and these
actually
are pretty.
a very good
I mean,
setup.
Again, we have bearish sentiment is 44%, Michelle, of respondents versus the 30% historical average. Only 20% of people were bullish versus a 38% historical average. So people hate the stock market right now.
People have hated this bull market since its infancy. So I think that's actually extremely positive. And I agree with you that as long as we can keep sentiment pretty low, I think there's absolutely upside in the markets. It would be more alarming if people were extremely optimistic, especially with these headlines, right? I mean, there's certainly some negative headlines happening, and I think if investors were just turning away from that, I would actually be more concerned.
And we know how long it's been, a decade plus, and everybody's looking for those late cycle signs. The IPO frenzy that we had a little bit earlier in the year when Beyond Meat was in the headlines every day, well, not so much now that we've seen some of the high-profile stumblers out of the block. There's not a ton of deal activity this year, for example. So how would you position people, Michelle, for this kind of environment?
Well, I think in terms of the IPO market, I actually think that's positive that the public markets are actually penalizing those that don't have revenue.
Absolutely.
And saying to the private markets, hey, you probably need to correct your valuation. So I would be more concerned if the public markets just continue to favor those that didn't have growth or didn't have profitable growth. In terms of positioning, I think it depends on your time horizon. I certainly wouldn't shy away from the bond market if you do have a short-term time horizon, because it's important to have that fixed income component. And I will say this, if we do get some type of trade resolution, I think the foreign markets are probably more ripe to move higher here because they have absolutely been hit by this trade war, and they have lower valuations than we do.
Although, Steve, again, the U.S. Numbers and companies, and the Fastenal point is an excellent one, look really strong. I mean, certainly relative to what people were bracing for.
Yeah.
And if the cycle's turning, as you say.
Absolutely. And I would say, you want to stay overweight equities here. We kept our 3,100 target all year long on the S&P. I think we're probably going to blow through it before the end of the year. I think if the market moves higher, Kelly, from here to the end of the year, it's going to be through the cyclical side of the market. That's where the news marginally is getting less worse more quickly. And so, yeah, the industrials, the financials, the material stocks rallying today. But longer term, we like the whole broad sector of the equity market. And I agree with you, Michelle. There's value internationally. It just has less of the big tech names that you probably want to own on a longer term view. So I wouldn't give up on the U.S. market here quite yet. We haven't really loaded up on international. We're a little bit more than positive there, but I think, I agree with you that there's room there, but there's plenty to do in the U.S.
Yeah, but don't you think if, we do see significant slowdown here in the United States, and really slowdown is just coming to trend growth, that investors will eventually reward those that have much substantial growth than we do here in the United States?
Right. I mean, we're not calling for a slowdown here, though. So I think we've been through a soft patch that's lasted 9 months. Mm-hmm. I've got the economy reaccelerating in the U.S. next year, and growth here is going to continue to be better than in Europe. So, yeah, if you thought we're heading to a recession here, Michelle, I agree with you, get overseas more quickly, but we don't have that in our forecast.